Hello, everyone. Welcome to another YouTube live video. This one is somewhat controversial, but important. 87,000 new potential IRS agents, $80 billion of funding that is absolutely going to the IRS over the next several years. What does that mean for taxpayers? And what does it mean for self-directed IRA investors? So I'm going to tackle those subjects. This is a bipartisan video. I'm not here going to attack Democrats. I'm not attacking Republicans. This is just about the facts. And the facts are as follows: that a week or so ago, the Senate Democrats passed the Inflation Reduction Act, IRA, which don't get me started on the name. I can't tell you how many clients said, hey, is this an IRA bill? It's not. There's nothing actually involving IRAs in this bill. Not one line, not one provision. Unlike the Build Back Better bill, which was, I guess, released to the public last September 2021, which had a lot of potential IRS provisions in there. That never became law. It's dead. Hopefully will never be resurrected and could lie peacefully. This bill has nothing to do with IRAs, even though the name is an acronym for IRA, Inflation Reduction Act. Now, I'm not even going to get into the fact that whether this bill reduces inflation. That's not the point of this video. You can call it a climate, health, and tax package, but either way, the president signed into law a couple days ago. And what I want to focus on today is $80 billion to the IRS. Yeah, that's a lot of money. And I've gotten a lot of clients calling, hey, Adam, what does this mean for my self-directed IRA? What does this mean for my solo 401k? Are they going to be coming after me? What are you going to do? Are you going to do anything to help me? So I want to tackle all those questions today. First thing I want to say is, the IRS does need money. So let me start this video by giving you some data, okay? And this is data that supports, because again, this is a objective, fair video. I'm not here trying to be pro any party. This is just facts, okay? And that's hopefully why you're watching this video, because that's what you want. You can figure out your own political take on this. But the bottom line is that in 2010, there were 94,000 IRS agents. Today, there's 78,600, okay? The IRS claims that some of the software and technology they're using is literally from the 60s and 70s, okay? And they feel that they are not well capitalized and they are not able to properly do their duties. Plus, they believe that in the next several years, 50,000 potential IRS agents will ultimately retire. So they are concerned that they need money for technology and they need money to hire new people. So that is their argument. Okay, and clearly the Democrats believe their case. Now, another important reason why the IRS got funding in this bill is they claim that for every dollar of money spent on an audit, they can generate $10 of revenue. Okay, so if you're a Democrat and you're looking for ways to pay for all your environmental, healthcare, tax packages, according to reports by the Congressional Budget Office, the $80 billion of funding to the IRS will create $203 billion in revenue over the next 10 years. Okay, so the Democrats are saying, yeah, we're going to give the IRS $80 billion, but they're going to bring in $203 billion of additional revenue, which is, $140 billion net gain. Okay, or give or take $120 billion net gain. So they're saying this is a win-win. And guess what? That $120 billion we can now use to pay for all these packages and proposals and environmental, healthcare related benefits that we want to give Americans. So that is the Democratic position. Okay, like, yeah, money's going to the IRS. We'll talk about where that money is going to go and is it going to be directed towards rich people middle-class people, low-income people, billionaires. We'll see where that money will go based off what the Democrats are saying and what potentially could happen. And we'll ultimately, talk about what impact, that could have on the retirement account industry. So now that you kind of know the IRS's position, hey, we need a lot of money. We're losing people. Our technology's out of date. Can't train people because they're not even learning in school the technology we have because it's so outdated. And now let's get to where that money is going to be used. So we know, according to the IRS, the Congressional Budget Office, that it's going to generate $203 billion over the next 10 years. And we know this $80 billion will be allocated over the next several years to go where? Well, they claim that a percentage of it, the majority of it will go to technology. Okay, so if you look at the IRS data, what they claim, they at least state that only less than 50% of the money will go towards enforcement or hiring agents to go after people. Okay, they claim 45.6 billion. So actually a little bit more than 50%, excuse me. So they claim 45.6 billion will be used for enforcement purposes. And the rest will be used for, technology and other related expenses. So they're saying, hey, not all 80 billion is going to hire IRS agents and go after people. Only 46 billion is, which is still a pretty big percentage, right? It's over 50% is going to enforcement. Where does the number 87,000 come from? It wasn't made up. It's actually a number that comes from a past bill that projected that that's what the IRS was going to use the money for. Okay, so that money wasn't, that number is not made up. It's a real number that the IRS has used in the past as a means to show where they would need to use the funding for. Okay, so that's where that number came up. It's not a Republican number. It's not a Democrat number. It's a number that was put forth based off a prior bill to show where money would be intended for use. So let's now recap, okay? We know where the money is now allocated, right? About 57% is going to enforcement. Approximately 87,000 agents are expected to be hired over the next several years. And it's not, all the money is not going to the IRS today. It's going to be over a period of years, and not all the agents will be hired today, right? The question is, will they be able to even hire that many people? Who knows? But that's what they're going to at least try to do. Now, who's getting audited, right? Now let's get to the most important part of all this. Yeah, if there's $80 billion and you're going to go after 700 billionaires, yeah, we really don't care, right? If you're going after Google and Tesla and Yahoo's and Facebook's, we don't really care either. But the average American, right? Where's the money going to? Is it coming to be used against us or not? So let's look at what the money's used for today. Okay. People don't realize this, but more than half of the IRS's audits in 2021 were directed to taxpayers with income less than $75,000. And this is according to IRS data. So more than 4 in 10 of the audits targeted recipients for the earned income tax credit. This is low-income people. An earned income tax credit is someone who makes, married filers jointly, less than like 25, 30,000 bucks. There is a lot of abuse because people claim they have a lot of children, or they don't claim they don't have a lot of income, and they get the credit as a refund. The interesting thing about the earned income tax credit, it's not just a credit. The excess credit's actually refunded to you in cash. So there's lots of abuse where people say they have like 7 kids, or they've adopted 15 kids, or their income is low, and they actually get that cash back. So a lot of the fraudulent tax returns that are filed, I'm not sure if you've had the unexpected welcomed letter from the IRS saying, hey, thanks for your filing, here's your refund, or you already filed your tax return, thank you very much. A lot of those fraudulent returns are being used to claim the earned income tax credit and get the cash back. So those audits are targeted towards people that make less than 75K, which are not billionaires. Okay, so that's number one. Most of the audits today are not going after billionaires. There's only 700 or 800 billionaires out there, right? There's Fortune 500 companies. There's a few thousand companies that have a few hundred million in revenue, right? Most businesses in America are small businesses that have under $10 million. Okay, so what does the Democrats say? Okay, the Democrats say when they released this bill, when it went through the House and Senate, they said, hey, there is no intention that the money is going to be used to audit taxpayers that pay more than $400,000 in tax, or have, more than $400,000 in income. Okay, so they've claimed, and the IRS has backed this up, saying, hey, there's nothing in this bill where we are intending for that to happen. But they use the word intent. So very interesting, Senator from Idaho, Senator Crapo, he tried to put forth a bill that basically says that you're not allowed to target anyone that makes less than $400,000 if you get this money. And it was rejected 51-50. All the Democrats voted to reject this. So take from that what you feel is right. But the Democrats were not willing to say that no one under $400,000 will get audited by this extra money. Why? Because it's going to happen. Okay. When you hire tens of thousands of additional auditors, when you have all this extra money, you're going to go after the low-hanging fruit. And unfortunately, the way this system works, and I've seen it in audits, is people that don't have a lot of money and are low income, they don't have money to hire accountants and sophisticated attorneys, and they simply get scared into paying. Okay, I've seen it 35, 40 times with clients saying, hey, I only have 50, 75 grand in my in income. I'm not a rich person. I have some IRA money with you. Adam, what should I do? I got this letter from the IRS. It's not involved in my IRA. I can't afford to hire a tax attorney. I don't think I did anything wrong. And guess what? They end up paying or working out some type of payment schedule with the IRS. People that are with a degree of higher income, especially the wealthy, they will fight it, right? They will pay for accountants. They will pay for tax attorneys, and they will fight it. And often they'll win. Or at least they'll be able to negotiate with the IRS. The IRS doesn't like to lose. Okay, they don't like to spend resources and lose, and the numbers back it up, right? For every dollar they spend on audits, they generate $10 of revenue. So they go after taxpayers they feel that are going to be scared into paying, and that's the concern. Okay, is it intentional? Are these agents only going after liberals or conservatives or Trumpers? No, really not. Okay, these are government officials. They may have political orientations, but they're pretty bipartisan when it comes to actual enforcement. They don't really care. They're just doing a job. They are going after low-income people, and that's just a fact. And the proof is that Crapo couldn't get this, this piece of legislation passed, or this amendment where the Democrats would guarantee that no one under $400,000 would be audited. And unfortunately, it's just going to happen. We're all going to see a higher level of scrutiny. I'll give you just an example of how this stuff works. So I have a client that sold a 401k with IRA Financial. He did a rollover, IRA rollover into a 401k, simple, super clean, vanilla. He gets a letter from the IRS like 8 months ago, saying you owe us, X dollars in taxes because you never reported the rollover as a distribution. And he wrote back, said, no, it wasn't a distribution. It was a direct rollover from an IRA to a 401k. Here's the plan. Here's the IRS opinion letter. Here's my statements to show the money being transferred. Here's the bank account statement showing the money received into the 401k on the date of the rollover. Sends all that info. He gets a computer generated letter a few months later saying, sorry, pay us the tax. Does it again, sends back the information, same information he sent a month earlier. He gets another letter, send us the tax. This is your last notice. If you disagree, you can go to tax court. Gets another letter on how to basically elect into going to tax court to fight this alleged tax liability. Finally, 8 months later, he gets another letter from an attorney with the IRS saying, hey, I'm the attorney representing the IRS in this matter. These are the next steps to take in this case. So he finally calls me up and says, Adam, what do I do? I said, listen, you're a client. I will help you. What I suggest is you call up instead of having us call up, especially me as an attorney. You call up and just tell them the story. Say, hey, listen, I don't know what's going on. You guys aren't reading my letters. You're not looking at my evidence. This is a rollover. I didn't take any of the money. Here's all the proof. What are you guys doing? So he calls the agent, calls me back 20 minutes later and says, you won't believe it. The IRS agent says, send me all the stuff. If everything checks out, case is waived and we can move on. So he asked the attorney, why didn't someone look at this? I wasted 8 months. I was stressed out for the last 8 months thinking that I owe, all this money in tax liability. What's the deal? And he said, honestly, these are computer generated letters. We don't have enough people looking at this stuff. And ultimately, some people just pay it. And then the people that don't and have a good case, we will work with them to resolve. So bottom line is, if he wasn't a client of IRA Financial, he didn't kind of understand the rules, he may have just paid the liability. I think it was like $40,000 in taxes. It wasn't, a few $100. It was real money. So this is the facts. This is what happens. They send people letters. They scare the heck out of people. If you ever get a letter from the IRS, literally the first letter you get is like, we're going to garnish your wages. We're going to seize assets, like crazy stuff. And this isn't if you're a Trump or a Democrat or a Republican. This is going to everything. This is computer generated letters. No one even is looking at the responses you're sending back. Okay. Don't trust me. I was reading a Fox Business article. This William Henk, he's a former IRS lawyer. He retired in 2017. He said, absolutely, the government will still target middle income Americans with new audits under the IRA Act. He says, it's just the way it is. It's where the money is. They go after low hanging fruit, people that don't want to, aren't in the position to really fight, and contest these liabilities. So that's the way the system is built. And if you add $80 billion of funding and 80,000 plus more agents, imagine all the additional letters we're all going to get, right? And they're scary. Even for me, I'm a tax lawyer. I've done, hundreds of audits as a tax lawyer representing all types of different corporations and individuals. And, they're still scary, even for me. Okay, when I get these letters for my personal taxes, it's not a letter I want to open, right? When you see that letter with the Internal Revenue Service on the top left, it's not fun. So imagine if you're just a regular, taxpayer making $50,000, $75,000, just trying to get through the day, trying to make ends meet, and then you get this letter saying you owe a few $1,000s in taxes. You get scared, and you call them up and say, "Okay, how do I pay this thing? I don't want to go to jail. I don't want you to garnish my wages or seize my home or take my dog. Let's make this right." So even if you aren't in the wrong, that's the problem with all this. Okay, and that's my concern. The statistics say there's, again, only 700 or so billionaires, right? The 87,000 agents are not going after billionaires. And guess what? Billionaires have the best lawyers, and they're not just going to cave. They're happy to fight. They got the money to fight. So same with Fortune 500 companies, same with large companies. Who ends up paying? Low income and small businesses. They get scared into paying. And the numbers work for the bill, right? President Biden and the Democrats looked at this and said, oh shit, we could give the IRS $80 billion, amazing, and we can generate $200 billion. This is a win-win. We'll take the $120 billion and pay for all our programs. It's amazing. Okay. Yeah, it sounds great on paper until your loved one is involved in one of these letter writing campaigns with the IRS where there's no end in sight, and ultimately they have the upper hand because they have all the resources and they're the government. So you're basically perceived as guilty from the outset. So what's the impact on IRAs? Ultimately, IRAs don't have an audit division. The IRS has no specific audit division for IRAs. So IRAs that generally are under the small business SE, small business self-employed audit department. Most IRAs actually get audited for taxpayers over the age of 72. Why? The IRS wants to confirm that people are accurately valuing the IRAs for required minimum distribution purposes. So that's the majority of IRAs being audited is just, hey, you're 75, 82, you've reporting a few $100,000 in your IRA. What's it invested in? Oh, it's invested in real estate or a private placement. Let's look into this to make sure you're valuing it properly. Believe it or not, the IRS is more focused on valuation than prohibited transaction. That's not a big concern of theirs. They're more focused on valuation, because even if you're doing a prohibited transaction, if the IRS is going up in value and it's a pre-tax IRA, they're going to win at the end of the day because you're going to be paying required minimum distribution. So that's the majority how IRAs are audited. IRAs do come under attack through creditors, through divorces, things like that. But mostly from an IRS standpoint, it's not just a random like, hey, I'm just going to pull items 5498 and audit the IRA. It doesn't work like that. Okay. The IRS does not issue trust companies like IRA Financial summonses and saying, hey, give us all your clients' data. We want to know everyone who did cryptos. They don't do that. The SBSE, Small Business Self-Employed Division, will audit an IRA basically once it's auditing a taxpayer. So it's super, super rare where an IRA is subject to an audit specifically targeted. What generally happens is the taxpayer, Adam, is audited for my small business or my 1040. And then from that audit, they'll ask questions about, hey, what's your IRA invested in? And that generally only becomes an issue if you're over the age of 72 and you're taking required minimum distributions. If you're 45 years old, 48, 53, they're really not going to focus on the IRA because number one, they'd have to prove prohibited transaction because there's no RMD. And going back to the initial point of this video, the IRS likes to win, and they do win. And according to the Congressional Budget Office, that $200 billion of revenue is going to come from the $80 billion of money going to the IRS, which we know 57% of that $80 billion is going to enforcement. So about $46 billion will generate $203 billion of money to Treasury. So they expect to win. And IRAs are tough to win. Why? Because most of the prohibited transaction cases are gray. It's not, people aren't just buying a house with their IRA and living in it, or buying themselves a Rolex with their IRA or a car. People aren't doing that. You know, maybe one out of 50,000 are abusive. Everyone else is fine, following the rules and trying to figure things out. Okay. So sometimes if the IRS wants to argue a prohibited transaction, it's a gray area. Like, hey, I own 40% of this company and my IRA is investing in it. Is it prohibited? Well, on its face, 4975 says you have to, if you own less than 50%, the entity is not disqualified. But hey, is this a self-dealing conflict of interest transaction? Is the IRA making the investment in that business to exclusively benefit the IRA? Hey, that's a facts and circumstances. Now you have to look at the taxpayer's intent, right? There's a big set of analysis that needs to occur. It's not an easy case. That's going to cost the IRS money. They're going to need witnesses. They're going to need depositions. They don't like doing that stuff. Why? Because that $1 is not going to turn into $10. And there's no guarantee they're going to win that case. And trust me, they do not like to go to court and lose. Okay. So that's why you don't see a lot of prohibited transaction cases, because most are gray area. Most will settle out or they won't even audit it. So that's really the core of the analysis that, hey, yes, we're all going to be subject to greater IRS scrutiny, even IRAs and 401ks. IRAs are not specifically examined by the IRS. There's no specific directed audit division by the IRS for IRAs that falls under the SBSE. The SBSE will have more beef. They'll have more money. They'll have more agents. So they'll have the capacity and the time and the resources to scrutinize our tax returns in more depth. That's just the facts. Okay. And that's going to happen. The money's already allocated to the IRS. So we're in for more letters, right? More letters from the IRS. It's just the way it is. Now, this may be, kind of a self self-serving prophecy, but it's important if you have a self-directed IRA, work with companies that can support you. I believe, IRA Financial is the best in the industry at this because of our resources. We've had clients audited and we stood with them throughout the process. Thankfully, it never got to tax court. Most times it's just, hey, show me what the IRA did, or most of these audits actually occurred in the solo 401k world where they're like, hey, send me your documents. Let me see your opinion letter. Did you get your plan restated? Let me just make sure you actually have a plan. And that's just a paper pushing process, which we help the client. If it's reviewing letters or writing letters, that's something we help our clients do as well. So if you work with IRA Financial or some other companies in the space, make sure they're part of RITA, the Retirement Industry Trust Association. Do your research, but not all companies will be there with you if you need support. So just make sure you understand that. What else? I want to give you guys some numbers before I get into questions. I thought the Crapo proposal was interesting that all Democrats voted against it. To me, that's a little surprising. I mean, I know you can't guarantee that no one making less than $400,000 will get audited with that money, but I think the word intent is pretty loose. This is what the IRS said, and I wanted to just kind of give you their thoughts again, because I want to try to balance this. Again, I don't want to just come against the IRS. It's easy to attack the IRS, and but there are people that work there that are good people that are just doing their job. So this is what the commissioner, Charles Reddick, said the $80 billion in funding would not increase audits of households making less than $400K. Reddick wrote to lawmakers that his agency was committed to upping enforcement in areas of challenge for the agency: large corporate, global high net worth taxpayers. These resources are absolutely not about increasing audit scrutiny on small businesses or middle-income Americans. The resources in the reconciliation package will get us back to historical norms and areas of challenge for the agency. Okay, so that's the IRS's position. Now, some more data from the Treasury. So this is from, which I thought was interesting, Natasha Sarin, who's counselor for tax policy and implementation at the Treasury Department. And she basically said that many of the new hires would fill positions left open by employees who are projected to leave the agency over the next decade. At least 50,000 of the agency's current employees are expected to leave over the next 5 years because they're eligible for retirement. And she said that the 87,000 figure appears to come from a report the Treasury Department published in May 2021, which outlined the impact of tax compliance measures in the Biden administration's American Families Plan proposal. The report estimated that the IRS could hire 86,852 employees by 2031 with nearly $80 billion in additional funding. So that's where that number comes from. This is a number that the IRS put forth, or at least the Treasury Department, and it's not a number made up by Republicans or Democrats. So it's a real number that they feel they're going to be able to hire based off $80 billion in funding. So am I in favor of this? Of course not. I mean, I don't believe in a larger IRS. I think the IRS should make things easier. It's already too complicated. 1040s, 1120s, all these types of tax returns are way too complex. Am I worried about IRAs and solo Ks? No. Why? Because they don't generate money. Again, remember, $1 to 10. Okay, that is the core of this legislation. The core of getting $80 billion is the IRS has been able to prove and prove the Congressional Budget Office that they can generate about $120 billion on the $80 billion. Actually, on the $46 billion, right? The rest is going to be used for other directives like technology. So the 1 to 10, right? Every dollar of pursuing audits, you'll get $10 in revenue. Okay, and that's the core of this bill. So they're not going to go after IRAs in greater numbers because most prohibited transaction type cases involve gray areas. facts. And facts require depositions, intent, and takes time and money. They're going to continue pressing small businesses, middle to large businesses, and low to middle income taxpayers. Those are the people that are going to feel the brunt of the money. It's just the facts. The rich people, the billionaires, they're going to laugh at this because they don't care. They have money. If you have $500 million in net worth and you generate $20 million of revenue a year, you get 5% on that. It's like, you can't spend that money. So if it costs you a couple $100,000 more to pay for an accountant or a tax attorney to fight the IRS, who cares, right? But someone who makes 100, 150, 200K, they don't have that 100K to fight the IRS, so they're going to cave. And that's what's happening. And it's a money grab. It's simple. They've told us this is a money grab. We need the 100 billion plus to pay for all these important proposals. Now, again, I'm not saying that saving the environment is not important. I'm not saying that reducing cost of healthcare or prescription drugs is not important. I'm not saying that. I'm just saying they're using the 80 billion as a money grab. And guess what? The money's got to come from somewhere. So it's coming out of our pockets. Just the bottom line. The money's coming from somewhere. This is a recirculation of money. That's all it is. They're just taking money out of our pockets to pay for these proposals. Now, you can agree with them or not, and some of them I do agree with, but I wish there were different ways to do it. This is essentially an increase in taxes without saying it is. Why? Because they're just going to come after and get the money directly from the taxpayers. Now, they're going to say, well, just don't do anything wrong, right? That's the attitude a lot of Democrats are saying is like, well, just file your taxes, and if you don't do anything wrong, you got nothing to worry about. Guess what? It's not the way it works, because just like a lot of people in court will take pleas, even if they're not guilty, because it's just cheaper and more cost effective to plea out and get it behind you than fight the IRS or fight the Department of Justice. Same thing here. People just concede and give in because they're tired or they just don't have the money to fight. And that is what's going on. So they're basically, this $80 billion is an increase in taxes to all of us or whoever is going to pay it. And that's just the bottom line. So it's nothing we can do about it. I had someone, a client a few days ago say, Adam, the email wasn't sent to me, but it came to me and said, I'm not doing these restatements on the solo 401k. The restatements are due by July 31. I don't believe in the government. The government's not legitimate. I mean, those type of arguments don't work. So don't even go that way. I mean, it's not going to work. You're going to lose. You can talk to Wesley Snipes about that. Best we can do is be smart, okay? Talk to experts, work with good accountants, good tax lawyers, and be conservative in what you're doing. Okay, I'm not saying you shouldn't minimize your taxes, but do it legally. Okay, because the IRS will be scrutinizing all of our returns with more frequency and with more vigor. It's just the way it is. They need the money. They need it. And and the Congressional Budget Office is saying that the money from these audits will pay for climate control or prescription drugs, and it's just a money grab. It's just the way it is. So let's go through some of the questions and see what happens. See if we can discuss anything else together. Okay, Frank, certainly won't be targeting only over 400K wage earners with the large of the increase in personal. Yeah, obviously, Frank, I'm with you. The fact that they wouldn't agree to the CRAPO proposal, they use the word intend. Just the fact is most Americans earn less than 400K. And if you need to come up with cash, you're going to go where the easy money is, right? The easy money is with taxpayers that make less than 400K, who don't have the capacity to fight. And it's just the way it is. So the argument is, well, just don't cheat on your taxes and you're going to be okay. And the point is that it's not the way it works. People get scared into just conceding and paying because they don't know better. Thanks for comment. Same thing happened to me. As soon as I filed for a trial in tax court, they decided I didn't owe anymore. Yeah, good point. So again, that is the problem. Is not everyone, this is C Silver, not everyone has the capacity to enter into a writing letter campaign with the IRS, or even knows what to do, right? Some people just get scared. They see wage garnishment, they see seizure of assets, right? I love when they do that. I got a letter, was it last year? I think it was last year. I think I owed $1,200. Like, I guess I miscalculated my taxes. I don't know how, but so I owed them like $1,200. And literally the first letter I got was big bold letters on the right, but I think it was above the $1,200. Like, seizure of assets if you don't pay. Scaring the heck out of me. It's like, you just sent me the letter yesterday. Like, give me a chance to digest it. So they scare people into paying, and that's just going to be even more prevalent now with added money and added revenue agents to send more letters and do follow-ups and scare more people into paying. It's a money grab. It's what it is. You don't need 87 new agents to send computer letters. You're right, but you need more agents to push paper and scare people, and that's just the way it is. People need to push the computers. People need to open the envelopes, and ultimately, you do need some people. So, in addition, every agency likes a big budget. Okay, so it's also a power grab from the IRS. Every agency, they love to have a large team, because the larger the team, the more money they're going to need in the future. And every organization wants to keep their budget high. If the IRS said, oh, we're good with 60,000, 70,000, don't worry, guess what? Congress would look and say, oh, they don't need the money. Let's move and give the money somewhere else. But the IRS is not just about tax collection. It's a money-making enterprise that is now being used to fund not just the roads and the military, but other type of programs. So it's unfortunately just a money grab. Totally agree. IRA Financial is hands down the best service, best knowledge, most affordable retirement service provider in the industry. Did my research for years ago, and IRA Financial is the best. David, thank you so much. I really appreciate that. Again, this is my passion. This is what I love. I would not do anything else in my life. Even if Elon Musk bought the company for $44 billion, I'd still be doing what I'm doing. I love it. I believe in it. I believe in people having control over their retirement accounts, having freedom, and being educated, knowing that they can diversify and invest in assets they trust. And we try to do it with flat fees, great technology, and great customer service. So thank you. You're the best, David. Thanks for the kind words. Okay, so applying their current focus and practices, it seems taking distributions would be the highest potential trigger for questions and audits, unless their scoop broadens with all the extra agents. I'm not sure with that, Kevin. I think once you take a distribution, they don't care because you're paying tax on the amount distributed. I still think people over the age of 72 are going to feel the biggest brunt of the IRS power now, because that's the easy money to go after, because you're already in a requirement and distribution stage. So you already owe money. So if the IRS can show that, hey, your IRA that you're saying is worth 130 should be worth 230, they're going to increase their RMD. And so I think actually that's going to be the biggest target area is the elderly, the retired, which is scary. But I just think that's going to happen. The prohibited transaction area is too difficult, too time consuming, fact specific, and takes too much time and effort to win those cases. You can look at the recent McNulty v. Commissioner. It was a tax court case, and I agreed with the tax court. These taxpayers held gold at home, which you can't do under 408. You have to hold it at a U.S. depository. But if you look at when the case started, it's like 7 years, right? It just took a long time. So they end up getting some money and some excise tax, but ultimately it probably wasn't worth their time doing. Now, it sets good policy, and I think it's a good case, but it's probably not worth their time. They probably spent a lot of money and effort fighting that case. So that's just something to think about. Does IRA Financial provide tax attorney service for customers? Now, we're not a law firm, so we can't give legal advice, but yeah, we do have tax professionals, including myself, that will help clients if needed. Now, thankfully, again, we have almost 24,000 clients. We've been doing this 12 years. Like I said, only a handful of audits, and I think 99% of them have been RMD issues or solo 401k issues. Just, hey, just making sure you have a plan, send us your plan documents. I think I had maybe a handful of questions on transactions. So I'm not as concerned for IRAs and 401ks with the 80 billion. I am concerned for all of us individually. If you're a small business owner, if you are, I'm not even saying a high net worth person. I think from an individual 1040 standpoint, we're all going to feel the pain, especially people making probably 100 to 500, 600,000. That's going to be the core. But again, if you look at the numbers currently, the biggest area of audits, the earned income tax credit, because that's where all the fraud is. Can that change? Potentially, but they're going to still attack areas of fraud because that's where the money is. Hey, Adam, the particular legislation is quite troubling, coupled with the fact that IRS is now buying and has bought enough ammunition and small firearms to be one of the largest armies. I don't want to get into that. I don't know who's buying guns or not. I'm not sure they need guns, right? They can send letters and scare the heck out of most people and get money. Their goal is money. That's all they care about. That's what the IRS is about. They're not looking to put people in jail. They'd rather get our money. Now, if there is fraud, they'll refer it to Feds, Department of Justice to seek criminal sentences, but it's about money. The IRS is a big revenue producer for the government, and generally they don't need guns because they'll call the FBI in to arrest you if it's a federal crime. They don't need guns. But are they buying more? I have no idea. But I'm not a big proponent of big government. I grew up in Canada. Big government doesn't work. And the IRS doesn't need to get big. Technology, if they use the right technology, if they took 80 billion and said, hey, we're going to put 70 billion into new technology to make the filing process simpler, use blockchain technology, whatever they're doing, I'm all in favor of that. I'd be fine with that, honestly. I don't think you need 80,000 more people floating around trying to audit people's returns. Technology can solve a lot of this. And if the tax forms were easier and there was less credits and deductions and there's more of a simplified tax system, there would probably be a lot less abuse. Adam, you're awesome. Thank you to be putting the truth out there and giving us peace of mind. The last bills proposed before the reduction had in the IRS tracking our bank accounts. Yeah, that's true. That did not pass. But again, technically anything over $10,000, they are getting information on. Government can get information on anything they want, essentially, right? We know that. And the IRS, again, no one's ever found out who leaked the Peter Thiel information to the ProPublica last year, right? They got $80 billion of money. There's a major leak. The fact that Peter Thiel and a number of other billionaires, including Elon Musk's, all their tax return information was leaked to ProPublica. There's been no investigation as far as I'm concerned. And as far as I'm aware, into what happened. So to just get $80 billion more without any caveat that any of those leaks get shored up, somewhat troubling, because the information we provide the IRS should be kept confidential. Whether President Trump's tax returns should be made available or not, that's a different story. That's up to the courts. But when you do submit a tax return, you should expect your information to be kept confidential. Is it true the IRS has access to all transactions in your bank account that are connected to your tax return? Love IRA Financial. Thanks, Kara. Generally over $10,000, yeah, there's information. Underneath, they can always just issue a subpoena to get it. If you're under audit, they'll just ask for it. And if you don't provide it, they'll subpoena it. So yeah, they can essentially get anything you want. Banks generally don't just disclose to the IRS every transaction you're doing. But guess how they get it? They audit you and they say, give us your bank accounts. And if you say no, they'll subpoena or issue a summons to get it, because the IRS has super broad summons power. They can essentially get anything they want. They can issue what they've done in the past How they found all these tax cheats, in the mid 2000s, early 2000s that had Swiss bank accounts or foreign bank accounts, is they issued John Doe summonses and just said to UBS or Credit Suisse, oh, just send us information on every American that has a bank account with you. And they did that, whether those individuals did anything wrong or not. So they have extremely broad summons power. They can get anything they want. All they need to do is show there's some cause for it. And all they need is audit you. And once you're under audit, they can prove that there's cause. So, the reason President Trump's been able to withhold his returns, made it public, is as president, he has a different set of conditions than you and I. So, but they're still going to ultimately get his tax returns. They've been fighting for a while, but now that he's not president, ultimately they'll get what they want. They always do. What's an RMD? It's a requirement of distribution, Kevin. So anyone over 72 that has a pre-tax IRA generally has to pay about 3% into income. So if you have 100K in your IRA and you're over 72, you have to take into account about 3% of it. There's a table that tells you what you owe each year. And that's how the IRS catches back some of that money that they let you have by way of taking a deduction and gaining from deferral in your IRA. Thank you, Adam, for always informing us and staying on top. Yeah, it's my pleasure, John. I love doing this stuff. That's my passion. So just to kind of cap everything, it's a lot of money. 57% of the 80 billion is going to enforcement. Whether they hire 20, 50, or 87,000 agents, there'll be more people out there. There'll be more letters to all of us. There'll be more people on the grounds. Will it impact self-directed IRAs? Specifically, no. I'm not as concerned because there's no specific audit division. Will they create one? No, because there's not enough money. Think about it. 60 million IRAs, probably 93 to 95% are involved in traditional investments like stocks. So there's very little abuse in those types of activities. Now, if you take the 5 or 7% in alternative assets, I know my clients and I know our industry, I'd say out of the 5%, 7% that are alternative assets, maybe less than 0.5% of those people are doing things that are maybe aggressive. The rest are doing things that are legal, buying real estate, hard money loans, buying cryptos, buying hedge fund and private equity investments. So there's just not a lot of potential money. And again, I'm going to go back to the initial point I made. Expect they'll generate $203 billion from this money. Okay. Every dollar they spend, they get $10 of revenue. They're not going to waste it on tax court cases, on prohibited transactions for $100,000 for investing in a company you own 23% of. Too hard to win. Okay. If you bought a house and live in it and they catch you, they'll nail you. That's just prima facie prohibited transaction, super easy to nail. Anything else, which is the majority of prohibited transaction cases, are super gray and takes a lot of time and money to enforce. They're not going there. They're going after low income, middle income, higher income people that have small businesses or have other sources of income, especially real estate, that are taking deductions, and they're going to try to carve those out so that they can force you into paying more tax. A couple more questions. Do you recommend going through middleman company in gold and silver to transfer depository, or is it easy enough for me to do it myself? Yeah, I mean, I think if you buy the gold, just have them transfer it directly to a depository. I think it's safe and insured, and that's what I would suggest, Kara. David, my bank recently requested some trust documents, 401k trust, to update their records regarding FDIC. I guess they're trying to be compliant with electronic record keeping guidance. Yeah, banks will request information from time to time, updates, whether it's a W-9 or just updated info in your bank account. That's fine. Yeah, don't worry about that, David. That's really not an issue. But this is it. It's the book has been sealed. Again, do the Democrats have any evil intentions? No, right? Because Democrats are getting audited too, right? Republicans are. We all are. We're all in this. We're all Americans. Biden's not sitting behind the desk, laughing, saying, "Ha ha ha! I'm going to get all those Trumpers." No, it's just the bottom line is it's a money grab, and they need money to pay for certain programs, and getting it from the IRS is a really good, profitable enterprise, right? because they expect to generate $200 billion over the next 10 years from the $80 billion in money to the IRS. So it's just a win-win, right? Anytime you can spend $80 and get 200 bucks back, you're going to do it. And that's what's happening here. So it's really a indirect way of just increasing all of our taxes. Will it impact the 700-800 billionaires out there? Maybe a little bit, but who really cares, right? If you have $2 billion and you owe the government another 100, 200K, who cares, right? It's going to impact the people making 50 to 500 grand. People like us that are dealing with inflation, dealing with higher costs, and now have to potentially with more IRS scrutiny and maybe even essentially just concede and give in because we're just tired of the nagging of the IRS and just doing a cost analysis. Hey, we owe 30 to the IRS. It's going to cost 20 to hire an accountant or a lawyer, and all the aggravation, screw it, we'll just pay the 30 and move on. Guess what? That's what happens. I've done it in business. You just cost analysis, and you just end up paying, and that's what the IRS wants. So hope you guys enjoyed today's video. It's kind of a long one. It's kind of a passionate subject because there are good people in the IRS. I know people that work there. I have friends that work in the IRS. They are good people. These are not, evil people that are coming after us, but they're doing a job. And if they have to do a job, they're going to do it. All right. That's their responsibility and their duty. And if they have more money, they're going to do their job with more vim and vigor, and they're going to be able to go after us with more capacity. So unfortunately, c'est la vie. It's just the way it's going to be. Thanks again for spending some time with me today. Really appreciate the questions. If you have more, you can send emails to info@IRA Financial or hit us up on social media. Definitely subscribe to the YouTube channel. If you have ideas for future live videos, let us know. Love hearing from all of you. And if you do have issues with your IRA or 401k and you're a client, let us know. We will help you. We'll write letters, and if we have to, even do conference calls with the IRS to help support your position. We've done it, and we will continue to do it. So we're here to help. God willing, you won't have any of those issues, but over the next 10 years, not going to be as easy. So have a great day. Hope you guys are enjoying your summer. Be well, take care, and have a great rest of your day. Thanks.